Hi everyone, welcome to another episode of Rise High Live. We are super excited to bring you this Rise High Live from our brand new office, which is super exciting. We moved in last Monday and it's been wonderful. So we are now live from our new office. So super excited about that. And also we've had some more exciting news in that we recently won 2 awards at the National Mortgage and Finance Association Awards, where we were awarded the awards for Best Customer Service nationally, which is unbelievable. So I wanted to have a huge shout out to all of our clients to thank you very, very much for your support for making that possible. But today I am joined by the wonderful Kristen Tunbridge.
Hi.
Who is absolutely amazing and was recently awarded national finalist and state winner of the Young Professional of the Year award for our industry, which is amazing. And we are going to talk tonight about all the things that you need to provide the bank to give yourself the best chance of success to ensure that your loan application goes through as smoothly as possible. So that's what we're going to be talking about tonight, and we have actually received lots of questions. I think it's a really popular topic. That there are things that are changing so frequently now with what the banks require, with everything that's going on with APRA and ASIC and the Royal Commission. So we're going to just be answering everyone's questions today. We already have received quite a few questions which we will be answering throughout the session, but we also have the opportunity to answer questions live. So if you have a question while we're speaking, please put it in the comments section, or if you'd like it to be anonymous, you can email amanda@risehigh.com.au and she'll filter the questions through to us. So welcome, Kristen.
Thank you very much, Brice.
You ready to get started?
I am indeed.
Okay, let's do it. So I think just to start us off, we're just going to talk about just in general what documents do we generally need to provide the bank when we're doing a loan application?
So it does differ quite a bit from bank to bank, and again on the type of transaction that you're actually undertaking, whether it's a refinance or a purchase or a debt consolidation. But generally the documents required fall into 3 categories, being your ID, so identification, proof of your income, and proof of your liabilities and your expenses.
Yeah, okay, well that makes sense. So let's dissect these all in a little bit more detail, because we have had some questions that have come through during the week around each of those. So
Sure.
Let's dissect those a little bit, and let's start with identification, because that seems to be a pretty easy place to start. I think most people understand identification. So let's start there.
Sure. So look, the ID does seem like a pretty simple topic, but it's surprising how often it can actually stop an application from going through. Just with people either not having enough ID available. So for example, if you don't have a passport, all you've got is a driver's license and you need a birth certificate, a lot of people don't necessarily know where their birth certificate is.
That
so
can be a challenge.
Can mean going out and purchasing a new one, which can take a couple of weeks or be rather expensive. So all of those little things to have ready and available in the background definitely make it a much smoother process.
And it's also the quality of the photos on the identification. I mean, I know that I've seen some driver's license where the photo is
or date of birth is rubbed off,
or it's very hard.
Yeah,
and sometimes lenders will reject that.
Exactly.
Won't they? They may not accept that, and they may request another form of ID.
Yes, indeed.
We did get an interesting question from Helen, who she actually asked that she's actually got a different name on her driver's license and a different name on her passport. And she's concerned about what name she has on the title of the property that she's looking to refinance.
Mm-hmm.
And, it's surprising how common this is.
It does happen a lot.
Especially, for people that have migrated over to Australia and that maybe they've got, 2 different versions of their name. Or even, Australians who have somehow managed to get their shortened names.
Their nickname or their
nicknames on their shorter name on a driver's license somehow. So can you just walk us through what would happen in this situation so we can answer Helen's question? In situations where, someone comes and they've got different names on different IDs, what's the best, what do we need to do in these situations?
So look, the best outcome is that before you're going through the process that you do have all of your identification in the same name.
Yeah.
Potentially there are ways where you can link the two documents, such as if you've been married, we can provide a marriage certificate, or if you have formally changed your name, we can actually get a change of name certificate which links the two forms of identification together.
And that raises a good point. If you're going through a refinance application and you bought the property in your maiden name, and then you've in between that you've got married, and then you need to refinance it, the bank may require a marriage certificate to show that you're the same person.
Correct.
That actually bought that property initially.
Yeah.
And they may require you to go through a change of name process during the application.
Yeah, exactly. That's quite common.
Which would mean that you would change the name on the title of the property, which has a little bit of extra costs associated with it, because you potentially have to, pay for the change of name fee.
Yeah, and that has to go through a conveyancer as well. So look, something we can help you with and help walk you through the process, but I guess,
little things to think about.
When you are applying for a loan, for any reason, ID is something a lot of people don't think about, but it's definitely something to consider.
So that sort of covers our, what we wanted to cover off on ID. And Helen, we hope we've answered your question. And we would like to say hello and a shout out to Rue, Emily, James and Patricia. Thank you so much for joining us. Really appreciate your time. And we'd love to hear from you. So if you want to leave a comment or question below, just do so. So let's move on to income. Okay, so what is the bank looking for from an income perspective?
Look, I guess there's two really main categories that people fall into. It's PAYG, so you are employed through an employer, or you're self-employed. So starting with PAYG, the most common form of document that we require is your payslip from your employer. Now payslips do come in various shapes and forms, and we've pretty much seen everything, but...
So what are the important things that the payslip has to show for it to be accepted by the bank?
Yep, so there's a couple of things that are really important. Your employer's name and their ABN, the dates that the payslip covers, your name needs to be on there somewhere, and often the banks want to see your year-to-date figure, so how much you've earned from the start of this financial year up until the end of that payslip is quite often one that's missed. There are ways around it, but it is something that most banks do require.
And given that we're in a new financial year now, so we're sort of in August, so we've only just started this financial year, a lot of the banks are also asking for group certificates to show the income from the previous year, because they want to see that your income is consistent over a period of time. So, and I get, how important is it for, particularly for those employees that have irregular hours, so maybe if you're casual or, part-time, but your hours vary from week to week, how important is it for that year-to-date figure to be on the payslip, particularly for those sort of...
so overtime and bonuses and changing hours, it's definitely, it's really important to have that breakdown, potentially even showing what your base income is and what your overtime is. We are really good at looking through different formats of payslips and helping you understand what is required. And there are alternatives if something is missing, like collecting bank statements to show your pay credited into the account is another way to verify that information as well if there's some bits and pieces missing.
Yeah, excellent. We've had a question come through. I'm not sure who it's from. 83 Rock. And so just wanted to check, will banks accept a handwritten payslip?
I'm not sure off the top of my head. I think in some scenarios, in addition to other documentation, they potentially will take it into account.
I think, generally speaking, banks would want to see something more formal than a handwritten payslip and would seek other verification.
Yeah, so you would potentially need alongside of that handwritten payslip, your group certificate, potentially even a copy of your employment contract, maybe even bank statements.
Yeah, sometimes that's what I was going to say. Sometimes they want to see your bank statements.
Yeah, just to show your pay going into the account.
So there's a lot of different, if you do have any quirks in relation to your pay, it's really important to discuss those with your mortgage broker up front, so that you can actually make sure that you get the best scenario for you, because different lenders have different rules about what they will and won't accept. We've had another question come through from back to back. So thanks for these questions. What do I do if the title of my property is in my maiden name? So we have touched on that, but let's touch on it again. So if the name of the property is in the maiden name, Kristen, what's the answer there?
So we do have the option to provide a copy of your marriage certificate, which I guess links the title from your maiden name into your married name if that's what your ID is in. But in some cases, the bank will actually request that you go through a formal process to change the name on the title when you are doing a refinance or a finance transaction, which we can help you with and step you through that process.
Yeah, it's probably important to note out at this point that you don't necessarily have to change your name on the title if your maiden name is on the title, but it is a good idea when you are doing a financial transaction, like say for example a refinance, to make that change of name, because it will make it a lot easier in the future if you ever go to sell the property.
Exactly.
You know, whatever you want to do in the future with that property, it will make it a lot easier if it's in your new married name. You know, you can actually take the initiative to change your name on the title in between doing a transaction, but there are costs involved, including bank fees. So you're probably better off doing it
as
in
part of
as part of a refinance or a purchase or something of that nature. Do you agree?
Absolutely.
Yeah. Okay, beautiful. So we've covered off on that. Now just going back to income, because we're sort of on the topic of income. So we talked about pay slips.
Yes.
Is there anything else that a PAYG employee will have to provide to verify their income?
So potentially, like we said, your group certificate or notice of assessment, contract of employment if you've just started a new job or you've had a pay rise, potentially sometimes even a letter from your employer. So if you work a lot of overtime or different shifts and that type of thing, the bank may require a letter from your employer just to confirm your base rate and your year-to-date income. And
some lenders these days are actually doing verbal employment checks,
yes,
aren't they? So just explain that, and so what's that all about?
So I guess as part of the process for banks doing their due diligence, even if you do collect and provide all of this information, your pay slips and your group certificates, some lenders will actually contact your employer and do an employment check, so just to verify the information that you've provided to the bank that it is true and correct.
Awesome. We've had a question come through from Emily. Thanks, Emily, for your question. Her question is, will banks accept a letter from an employer to confirm expected income and return to work date if you're on maternity leave? That's an awesome question, Emily, because obviously even when you're on a maternity leave, your income doesn't reflect your earning capacity, and people still want to do things while they're on maternity leave, like upgrade their house to fit their new family. So what happens in the case of maternity leave? What can we get from the employer to make sure that we can still fulfill loan application for the client?
Again, so it is assessed very much on a case-by-case basis, and some banks are really good at dealing with clients who are on maternity leave or planning to. But yes, quite often a letter from your employer stating your return to work date, hours and your income can definitely benefit you when going through the application process.
Yep, awesome. So just to clarify that point for Emily, you can submit a loan application while you're on maternity leave?
Yes, again, case-by-case basis, but it's definitely an option.
Yeah, awesome. Okay. So have we covered off on PAYG employment?
I think so.
One thing that we haven't touched on is how do you verify your income that you're receiving from other sources? Like, for example, if you've got rental properties, if there's other income coming in, what do the banks look for in relation to other income? Yep,
so if you are using that income for servicing, then the bank will definitely need to see documentation to prove that income. With investment properties, it can be a lease agreement, it can be statements from your property manager confirming the rent that you've received, and we can use bank statements as well to verify rental income coming in. Other things like Centrelink income, again, providing official Centrelink statements can help to verify that income as well. So
yeah, and sometimes official statements are required in relation of child support income that
yes,
you're receiving.
Absolutely.
So it depends, bank by bank what they actually require in those instances. But if you do have other forms of income outside of your employment income, it's really important to discuss those with your mortgage broker up front so that you are getting the best advice as to what documentation you need to provide. And we are also finding lenders that will be favourable to your particular circumstances around the income that you bring in. So,
absolutely.
Okay, should we move on to self-employed now?
Yes. Yep.
So just a shout out to Kathy, Rosemary and Susan. Thank you so much for joining us, ladies. Really appreciate you being on the line tonight. So self-employed. Obviously they don't have pay slips.
Correct.
And this self-employed category not only applies to business owners who run, small to medium or large businesses, but it also applies to independent contractors who trade through an ABN.
Exactly.
A lot of people think that they're not self-employed, but they are actually self-employed because they've got an ABN and they're actually getting paid through their ABN rather than getting pay slips. So this category really covers all of those.
It does.
Those people. So what do self-employed people need to provide to verify their income?
Look, they do have quite a few options available to them. The probably easiest option is to provide copies of your tax returns.
Yep.
And your notice of assessment and potentially your bank statements to show the trading income that you've got coming in.
So that would be tax returns and I imagine profit and loss and balance sheet.
Correct. Yep. So your full financials for the business and any other entities that you have. So under different trading names or whatnot.
Yeah. That's what we call a full doc loan application.
Correct.
Where we're giving the bank, full financials of all of the entities.
Correct.
That that the applicant is a director of, and tax returns and notice of assessments.
So we can provide the full picture to the bank for usually the last 2 years.
Yeah, are there banks that will accept just 1 year's
yes.
financials?
Yes, there are, but you will need to show that you've had an ABN registered for 2 years in most circumstances, but you can get away with just 1 year's worth of financials. So
that's interesting because different banks have different policies on how they will calculate self-employed income. Some will take an average of the 2 years.
Yeah.
Some will take the lowest year and add a little bit of a percent, and others will just take 1 year. So just in that, just from talking about that, there really is a different potential outcome
depending on which bank you use.
Depending on which bank
absolutely.
you use. So it's very, very interesting. Shout out to Ali and Leanne and Thomas. Thanks for joining us, guys. Really appreciate you tuning in. And actually, we did get a question from Roger. Let me just find it. Roger, through the week, did want to know what other self-employed income verification options were there outside of the traditional financials and tax return. Obviously, there's a lot of business owners that are probably in Roger's position where, the financials aren't necessarily prepared on time, in time for a loan application, or, may not necessarily reflect their earnings. So what options are available for people like Roger where they want to look at other options?
So I guess what we've just discussed a moment ago was what we call a full doc loan. There is an option for a low doc loan, which, as the name suggests, is low documentation. So instead of collecting your full financials and tax returns, the banks, they vary again from bank to bank on what they require, but it can be your BAS statements, so your quarterly BAS statements.
That's obviously for GST registered, businesses.
Your bank trading statements, and in some cases, even just a letter from the accountant can be sufficient to apply for the loan.
Yeah, so there's some lenders that will allow just the letter from the accountant
confirming your income.
That's sufficient to fulfil the obligations. So there are different options. Probably important to point out that generally the more information you can give the bank, the cheaper the
the better their interest rate.
Because it is sort of a risk.
Absolutely.
The pricing is based on risk, but so Roger, hopefully that helps you and tells you that there are other options. The BAS statements, the bank trading statements, and the letter from the accountant that can be explored if financials are not available for some reason. Okay, do we need to cover anything else on income, or have we pretty much
I think we've covered
that?
most of that off.
Okay,
Yep.
awesome. Let's move on to liabilities. Okay, so what do we need to show the bank in terms of liabilities?
So again, on a case-by-case basis, it does vary quite a bit, but usually banks will want to see proof of what your liabilities are. The best way to do this is by providing bank statements. So that can be
just for your existing loans.
Correct.
Yeah.
Credit cards, car loans, leases that you may have. The banks definitely require documentation to check.
Yeah. So Sally had a question through the week, and she asked, do I need to provide bank statements for credit cards that I don't use?
Yes, absolutely. So if you don't plan on cancelling that credit card, the bank will want to see an official statement, and it's very important that that statement does include the limit, so the bank can understand the limit that you can spend up to, does have your name, and is within the agreed time frame as well. So they don't want a statement from 6 months ago, they do want the most recent statement.
And it's important to point out at this point that, you know, banks have the ability to find out about things that are not declared.
Absolutely.
You know, so if you do have a credit card that's in your name that's not actually being used, it is still better to declare it up front and then make the decision about whether you want to keep it or get rid of it before you submit the application, because it is likely that they'll find out about it, and if you haven't
questions.
declared it, then that could be very detrimental and damaging to your application.
It can, yes.
You know, so it's definitely important to, you know, raise these things up front, I think.
Yeah.
So Stuart did ask, Stuart wants to know, why does he have to provide his bank statements for loan accounts that he's not refinancing?
Okay, so I guess a big part of today's current lending environment is banks are wanting to see your credit history. They're wanting to make sure that you're making payments on time, that you're not missing payments. So the only way they can do that is to actually ask for copies of statements for existing liabilities, even if they are not changing or moving anywhere. They also want the statements to be able to check the limit, so what you've declared is actually the limit that you do have on that facility, and even down to what are your repayments, what is the interest rate on that facility. So they are very important to provide, declare all of your liabilities. Yeah.
What about things like, you know, payday loans and, you know, things like that? You know, are they things that we need to provide documentation?
Absolutely. Yep. So as Marissa said, you really need to be honest and upfront with the application with all of your liabilities, and we can help you work through, like you said, an unused credit card. We can help you decide whether or not it needs to be cancelled, and then potentially even if you do cancel it, you will require a letter from the bank confirming that it has been closed.
Yeah. And one of the things that I always find, you know, people find difficult to get is statements relating to their car loans. You know, because they don't necessarily receive regular statements or hold on to them.
No. So it often requires a phone call to the provider of the car loan.
So, you know, how much time and energy does it save if the applicants can make these inquiries and make these phone calls up front before they lodge the application?
Oh, it's a much faster process, definitely. Especially if you are limited with time. If you do want to bid at an auction, we're getting you a pre-approval, which needs a quick turnaround time. Having these documents ready, or even as much as just having the contact phone number and the loan account number, so that when you do need it, it's quick to find that information and get hold of it.
Yep, awesome. We have had a question come through from Ali. Thank you so much for your question, Ali. So Ali's question is, if we were to buy a new house and keep our current house as a rental, would the bank take the income potential from the rental into account for the borrowing capacity? That's an awesome question, Ali. So let's address that one.
Yes. Answer is yes. Absolutely. It will form part of your income going forward.
So what will we need to give the bank to prove what potential rental income Ali will get for the house that they're moving out of?
Yep. So the best way to do that is to get a rental appraisal from a licensed real estate agent. That's pretty easy to do. Doesn't cost anything, and it's definitely something that we have the contacts we can help our clients with.
Yeah. So that's fantastic because you can keep your old house, rent it out, have it as an investment property, and you can use the rental income or the potential income from that to service the loan to buy your new home. So,
and the bank will do their own checks, so they'll get the rental appraisal, but potentially part of the process they may value the existing property, and the valuation often declares a proposed rental on there as well. So that's another option.
Hope that answers your question, Ali. Thank you so much for your contribution. Okay, we are going to move forward to assets. Okay, so often the banks ask for things, around your assets like council rates notices to prove what properties you own and things like that. What other things do we need to provide around assets?
So as you mentioned, council rates notices for if you're not going to get a valuation done on other properties, that can help the bank gauge that. Bank statements or share certificates to confirm your holdings of those other assets. Superannuation statements, because super forms a part of your asset base as well, so that may be required in some circumstances. Yep,
beautiful. Okay, I think we're on to living expenses.
Tricky one.
Living expenses is a big one and something that's really changed. So if you have not applied for a loan in the last 6 months and you are about to apply for a loan, this is going to be something that is very different to what you have been used to in previous applications. And the government is cracking down on all banks to really get detailed information from applicants as to their everyday living expenses.
Absolutely. It is a big change to the application process, where previously it was just a question we asked, very general question, but now we are having to drill down into certain categories and declare your ongoing regular living expenses.
Yeah, and we actually had Sonia, and we actually had a few comments on this. Sonia and Susan both wrote in, had very similar questions. They said that their banks just ask them to detail all of their living expenses, but they don't really know what they are or how to break them down by category. Is this necessary? And people are wondering whether it's just a bank-specific thing, whether there's some banks that don't need it. But in general, there's a bit of a consensus that, people are getting a bit overwhelmed by the amount of information they need to provide the bank.
Yeah, it's definitely a big change, but I don't think it's one that's going anywhere, so we better just get used to it, unfortunately.
Yeah. So would you say that it's really important then that applicants have a really good understanding of their living expenses?
Absolutely, and I think it's really important if you are purchasing property or entering into more debt, a process that everyone should sit down and go through their living expenses. We can definitely help you with this, and the banks generally tend to break it down into 12 specific categories. So it'll go through and ask you how much do you spend on groceries or how much do you spend on transport. So transport is, they are big categories. It can include everything from petrol to the number of Ubers that you take, to your train pass, to your car servicing kind of. So it is a fairly in-depth and lengthy process, but I really honestly believe that it's a good process for anyone applying for finance to actually sit down and have a good hard look at where their money goes.
How much does the declared living expenses impact a loan application?
We're finding that it actually can make or break an application. So you need to declare what your approximate monthly living expenses are. But declaring it's not enough, the banks will, in a lot of cases, ask for copies of your transactional bank statements. So that's
and your credit card statements.
And your credit card statements. So that's where you are showing your living expenses, your Netflix account, your down to that type of detail.
So if you declare living expenses that are lower than what is demonstrated by your credit card and your transaction account, would the bank come back and question it?
Absolutely. Yeah.
So that's a really good point. And what about if you sort of over declare, on your living expenses? And
look, that can cause issues as well. So you really do need to have a pretty good understanding. I mean, banks understand you go on holidays, you get married. There are expenses that are outside of the normal course of day-to-day living. So that is definitely taken into account, even if you're renovating a property, things like that. But so that's where looking into the specific categories There are definitely some budgeting apps. There are really good templates out there, and even just having a really good chat with your broker.
And a lot of the bank phone apps now actually categorize your expenditure, which is really, really good actually, I think, and really helpful. But it's a matter of just, if you're going to be applying for a loan in the near future, it's a matter of just taking notice of that and making sure that you're across, you know, what you're spending in what category.
Mm-hmm.
So
and the banks will look back. Usually about 3 months worth of transactional statements is what they ask for. So if you are looking to purchase a property, you think it may be an issue, you know, you've kind of got that 3 month window to tidy things up. Yeah.
And I guess, you know, if, you know, I know that a lot of applicants, if they haven't applied for a loan in a while and they want to apply for one now with all of these new requirements that have come in, they would, you know, it would be overwhelming.
It can feel like a bit of a shock. I have had, on numerous occasions, I have had clients say to me, going through this process, does the bank want to know the colour of my underwear right now? And I'm like, you know, it's almost at that level in some cases, but
I mean, sometimes it just feels a bit over the top, but it's important, you know, that's just the climate that we're in. And, you know, most of the banks are asking for very similar information. So it's really a matter, I think, of the climate that we're in. You just need to be completely upfront with your broker and really nut out everything, and then trust your mortgage broker to make sure that they're putting you with the right bank.
Absolutely.
That's going to, you know, that's going to sort of be able to look after you given your personal situation. So I don't have the colour of the underwear on the form yet, but that
it could be on its way.
Now, Rosemary did write in through the week actually, and I think this is a really interesting point to cover, because Rosemary is 50 years old and she wants to downsize. She wants to sell her house and buy a new one. But the banks that she's spoken to want her to pay down the loan really quickly, much quicker than she'd like to do. So she wants to know what she can do and if there's anything she can provide the banks that will enable her to get, you know, a longer loan term to help her with her repayments. Yeah.
So I guess this comes into play when traditionally a loan term is 30 years. Yeah. And let's say, for example, you are 50 years old. A loan term, a brand new loan term, would push you out to having a loan until you're 80, and most people don't plan to or want to work until they're 80 years old. So one option is to bring...
I guess the bank wants to know that you're going to have your loan paid off
before you retire. Yeah, so a lot of them will require you in some circumstances to bring the loan term back to a suitable retirement age, and a lot of banks have different, what they consider suitable retirement ages. But in this circumstance, providing an exit strategy is really, really important.
Yep. So let's talk about that. What is an exit strategy, and what would we need to give the bank to prove that there is a suitable exit strategy that would potentially give Rosemary a longer loan term?
Yep. So if you did want to extend that loan term out to 30 years to, I guess, help you manage the cash flow in the short term, you would need to provide an exit strategy. So that's showing that by the time you retire, you do have the ways and means to be able to clear that loan account at the time that you retire. So that can either be through funds that you have sitting in your superannuation, because by the time you retire, you can access your super funds, potentially make a lump sum payment onto the loan. You could have investment property, so potentially if you have unencumbered investment properties that by the time you retire, you could look to potentially sell one and pay down the loan that way. So there are definitely a couple of different strategies in there.
Yeah, and I guess that's the other thing that can, you mentioned before, you know, share portfolios.
Yeah, exactly.
Any other exit strategies, or even, you know, any other plans that you have in relation to, you know, what you might do. You might further downsize down the track, and some banks will accept that as a suitable exit strategy. So there's lots of ways. Shout out to Richard, Tom and Finn. Thanks for joining us, guys. Look, that's pretty much brought us to the end of our questions, and I think we've covered a lot today. We've really gone through what is required. I think, you know, whilst there are, you know, certain pieces of information and documents that are required for all types of applications, definitely what we're seeing a lot of is that there are very unique circumstances with each different application applicable to your particular circumstances. So it's really important to get the advice up front from your mortgage broker as to what they need and ensure that you've got everything together, because that will ensure that the loan application progresses as smoothly and as efficiently
quickly,
as possible.
yes,
Do you agree, Kristen?
Absolutely.
Yeah. So look, we hope this has been valuable to you tonight, and we really appreciate you tuning in. We loved getting all your comments and feedback and questions through the session, so thank you so much. If you know anyone that you think would benefit from this video, please share it with them. We'd love to be of service to them too. And we hope that you join into our next episode of Rise High Live, which will be next month. So also, just for those of you who are interested in property investment, we do have a couple more property investment seminars coming up this year. You can get the details on our website, risehigh.com.au. And once again, I'd like to thank the lovely Kristen,
Thank you.
South Australian Young Professional of the Year, for joining us at the Facebook Live segment tonight. So thanks for tuning in, and we'll see you next time on Rise High Facebook Live.
Bye.